we want to talk also about some data we got today that talks about the potential for economic growth or a slowdown, not only in the United States, but globally. To help us break this down, we invite into the stream Seemah Shah. She is Principal Global Investors Chief Strategist. Good to see you. She's joining us from London, and want to specifically talk about data we got right here in the United States today, which shows that retail sales actually increased in August about 0.6%, but it was slower than we had anticipated, and they revised downward the July reading. So do you draw anything from this? Should we be concerned? And if so, about what?
Hi, thanks for having me on. Well, look, with the retail spending numbers, I don't think we can get too worried at this stage. It's just one piece of data, and the rest of the economic data that we've been seeing for the US over the last month and a half has generally been quite encouraging. The thing is that, look, with retail spending, we've seen the very, very strong gains. Those are the easy gains. As soon as lockdown is lifted, you get a release of all that pent-up demand, and retail spending will do well. This is where we're getting into the tougher time, where this is going to be the real test of how strong the economy is. So look, we need to see a couple of more months, but at this stage, not too worried.
Seemah, not too worried, but then how do you position yourself now that we are entering, if we indeed are entering sort of a more delicate time in terms of finding that economic footing? Do you change your strategy to get more cautious, or do you keep going as you have been because you know that things like monetary policy will still be underpinning the markets?
Yeah, it's a great question. What we're seeing is actually we feel quite confident at the moment about the general economic environment. We feel like the economic recovery is starting to solidify. And in line with that, we also have the monetary policymakers really standing behind markets and making sure that I don't think we're going to see any significant market correction from here. So with that in mind, I think we need to have some caution, but at least start to look for the opportunities in the more cyclical sectors, which will benefit as that economic recovery gains a bit of momentum and continues to solidify. Our own positioning, we still have a strong preference for big tech. I think, if you have any kind of uncertainty, an environment which is a little bit difficult means that companies with strong balance sheets, positive cash flows will still continue to do well. But as I said, it's important to keep your eye out for those opportunities.
Jared Blickery here. Looking at all the economic data together, I follow the Citi Economic Surprise Index, and that peaked, I believe, in July, and it's been trending down ever since. A lot of the data has been disappointing. Housing market might be an exception. What do you make of all of this, and should it be concerning?
I don't think it should be concerning. As I said, I think that the first few months after lockdown is where you get very, very strong bursts of growth. If you weren't having that, it would be a very, very strange story. It's now that things start to slow down because you have to have bigger moves to get those bigger bursts. So actually, I don't find this concerning. I think we're going to settle down to a more moderate pace of growth. But as long as it's solid and it's continuing at that sustained pace, it's not something to worry about.
Seemah, it's Julia LaRoche here. And of course, we're getting right near the U.S. election here. And of course, it seems that it's going to be very, very polarizing. How are you thinking about the election from an investment standpoint? And I guess some of the kind of divisiveness that we've been seeing in the polarization and how that might play into your investment thesis.
Yeah, with the US election, I think, clearly it's going to be the main source of volatility going forward from here to the end of the year. So we need to be aware of that. Now, in terms of the investor positioning, actually, our recommendation is that you have to look away almost. You have all the noise. Because if you look over the past, there is this volatility. You have some major market moves maybe around those days. But a couple of months after, the market settles down and goes back to the previous path, which is really being driven by fundamentals. And what are the fundamentals? It's the Federal Reserve and what they're doing. The election result is not going to be impacting what the Fed does. So as long as you believe that interest rates are going to stay low, that there's still going to be balance sheet expansion, that's what you need to keep your eye on. And you should not change your positioning just because you're worried about who may win, who may lose.
Seemah, to take that a little bit further, several companies have suspended stock buybacks for several different reasons. Do you infer anything that would indicate future real growth when you talk about the fundamentals on the fact that they're doing that and not having to, say, boost their value by doing that?
I don't think that's something. I think what we're seeing with companies at the moment is they're taking stock of the environment. They're aware that there is going to be greater uncertainty going forward. and maybe starting to sit back and look. A lot of companies have had fantastic gains up to now, and maybe this is the time to settle back and just watch how things unfold. But I think from the investor perspective, stick to your allocation, stick to what you've been doing all along, and keep your eye on what the fundamentals are, because that's what's going to be driving markets over the next 6 months and longer term.
Seemah Shah is Principal Global Investors Chief Strategist at Principal Financial. We appreciate you joining us here on The Move.